to this week's MFB news. First of the autumn editions for you. Hope everyone's had a really fantastic week and enjoying the last knockings of the beautiful weather before we're thrown into the depths of autumn. But let's not think about that too much because it's still sunny at the moment, so we're just going to enjoy it for what it is. This week we're going to be covering off our usual roundup of what goes on with lender pricing and swap rates. And we're going to be delving into a report which will give us a really good sort of granular insight by region, essentially, in terms of what landlords have been up to for the last 12 months and how they're feeling about the future. Some interesting stats in there for you. Are landlords getting younger? I've read a really interesting report in the last week which talks a bit about that, so I'm going to share that with you. And then finally, we're going to have a quick look at house prices. Now, it has been a quiet week on pricing changes, no doubt due to, at least in part, the relative stability or lack of change in terms of swap rates. So 2-year swap rates as of 10:45 on Tuesday evening were at 4%. 1 month ago, they were just under 4%, so 3.96%. And 1 year ago, 5.4%. So as usual, we're kind of seeing a big step down year on year. But actually month on month in terms of 2-year swaps, things have floated up ever so slightly. And actually it's the same story with 5-year fixed rates. So as of last night, 5 years were at 3.7, 1 month ago 3.5, and 1 year ago 4.7. So I think, you know, with swap rates, because they are moving literally all day, every day, we can't put too much stock into a slight fluctuation upwards. It doesn't mean everything's suddenly going to kind of escalate, but I do think there is some real nerves in the market with regards to the autumn statement and how that's going to look. So we'll keep our eye on it for now, but because swap rates are essentially higher, they've gone up a little tiny bit. That's why we're not seeing a huge amount of repricing. Having said that, there has still been some repricing, obviously, just to kind of fly in the face of what I've just said. So first up, we've seen pricing come down from the co-op. They're down by 0.37, which is quite a large step down. TSB by 0.15, Vida down by 0.33, TML by 0.2, Clydesdale 0.2, and Virgin by 0.14%. So these are quite significant steps down. These are also lenders that, broadly speaking, we haven't seen reprice for a while. So they're probably just capitalising on the lower cost of funds a bit later than everybody else. And we've also seen Landbay launch back into trading limited companies. This is an interesting one. So when we're looking at limited company lending, most lenders want to lend to a special purpose vehicle. So essentially this is a company who is only going to be buying and renting out property. It's not going to be doing anything else. Now, there are some lenders who can lend to trading companies. So that could be a property letting business, but also you do a bit of IT consultancy within the same company. It could be that you're a full-on a dentist practice or a dental practice and you want to buy a buy-to-let through your company. So essentially a trading company in the mortgage world is a company that does anything as well as or instead of renting out property. So some lenders just accept trading companies as a matter of course. Some lenders have a different product range for those, and Landbay are one of those lenders. There's not loads of lenders lending to trading limited companies, but there are enough for sure. But it's great to see Landbay re-enter that space. They've also launched a new range of products for small HMOs and multi-unit freehold blocks as well. So basically the thing you need to know here is their pricing across all of this is starting from 4.89%. So in the round, in terms of pricing changes, we understand why there hasn't been much going on, and I don't think next week's going to be hugely different because of the cost of funds actually increasing slightly. And we may even see a slight floating up of lenders' pricing for those who are very, very sensitive to the cost of funds in the capital markets. But actually, I think really at the moment, you know, it's just kind of, things are kind of stuck until we see some real movement in terms of swap rates. Okay, now the Mortgage Works have released one of their wonderful reports, and this one is called their Regional Snapshot, which breaks down by region what landlords have essentially been up to over the last 12 months and also how they're feeling about the future. And it makes really interesting reading. So first of all, if we look at the kind of overall consolidated reports, this is across the whole of England. So first of all, 80% of respondents to the survey had bought a property in the last 12 months, whereas 17% had sold one. So there is more divestment than investment. 28% of respondents on average had had a rent arrears and 36% had had a void period. In terms of looking forward and confidence for the future, 37% had confidence for their own letting business, 36% were confident about rental yields, 19%, which it was 39, 19% were confident about a capital gain, and only 7% were confident about the UK economy. Now, it makes really interesting reading, and when we start to go into sort of more granular data, this might sort of make more sense. But actually, I think 37% being confident about their own letting business, which means that 63% aren't confident. This probably relates to mainly nervousness around changes that are going to come in over the next few years with regards to essentially what Labour are going to bring in with the regulation around being landlords. 36% confident about rental yields. Now, this is an interesting one because rents have been increasing year on year for the last few years, and there is still an expectation they're going to continue to do so for reasons we've discussed in previous videos. So I'm surprised that number is actually quite so low. It could be that people are just feeling quite negative in the round, and that's kind of impacting on it. It could also be that people are kind of likening rental yields to a number which incorporates the higher mortgage interest rates, so that could have impacted things as well. 19% confident about capital gains. Again, that's interesting because we are expecting property prices to increase. Again, maybe that's what everybody's saying, and that's what we've talked about in previous episodes. However, people may be thinking about actually capital gains tax when they're answering that question. And lastly, 7% are confident in the UK economy. Now, that's really understandable given the very bumpy road that we've been through over the last few years. Obviously, we are hoping that things are going to look a bit brighter, but again, there's still a lot of change coming up with regards to the autumn statements. Maybe people are just feeling quite nervous about that. So the sense that I'm getting from this is actually people are just kind of not quite sure what to expect, feeling quite nervous. Now, in terms of just kind of giving you a bit more regional information, just for your own kind of insight. So in terms of yields, the highest yields were in the northeast at 6.8% and the West Midlands at 6.7%. The lowest yields, unsurprisingly, central London 4.7% and then outer London at 5.5%. Now, the most active landlords in terms of buying property was the northwest. 17% of landlords from the northwest had bought a property in the last 12 months, and also the East Midlands at 15%. Lowest buying activity was in central London with just 3% of landlords investing, and the southwest at 4%. The most selling activity was in outer London, so 20%, and the East West Midlands, both at 18%. Lowest selling activity was east of England, central London and the northeast at just 14%. I say 14%, that's still quite high, isn't it? But comparatively. Rent arrears. So the highest level of rent arrears, or respondents that have experienced rent arrears, were our landlords in Wales, with 41% of them experiencing rent arrears in the last 12 months. The lowest response rate came from the southeast at just 23%. Highest level of rental voids in terms of experience from landlords was in Wales at 45%, no doubt connected to the rent arrears in some way, shape or form, and the lowest was the southeast at 33%. In terms of overall confidence, the most confident landlords are those in the east of England, scoring 135 points, and least confident were those in outer London at 75 points. So there you go. If you're wondering about where to invest and you're looking for some data which might help guide you, hopefully that will be of some assistance. Okay, now I'm just going to briefly cover off some data that I read, which I found really interesting, which was about the age of landlords coming down. So essentially this report says that data reveals a striking trend. Landlords buying property are getting younger. And actually that's going to be a good thing, right? Because obviously, there's a whole kind of contingent of landlords who were buying properties pre-credit crisis, who are now in their 60s and 70s and kind of thinking about getting out again. We do need younger landlords to come in and start kind of filling the hoppers at the bottom end. So the average age of landlords purchasing with a buy-to-let mortgage has plummeted from 46.4 years old in 2014 to 42.9 years old last year. Their analysis of industry data shows that property is still attractive to younger investors. Landlords in their 30s have surged from 21% of mortgage purchases to 31% in a decade, whilst those aged 18 to 29 now account for 10% of purchases. Now, what they do go on to say in their report is that this could be attributed to the fact that older investors may be simply just buying with cash, whereas obviously landlords, investors buying with mortgages are going to be younger. However, I still think it's really, really good to see that actually, and I think what I take from this is it's really reassuring to see that younger applicants are still coming up and investing in buy-to-let. The report did go on to say, why is that? And actually, when surveyed, younger respondents do actually really like the idea of owning buy-to-let property because they like the sort of security of it, the long-term nature of it, the fairly unvolatile performance in terms of growth of value, that kind of stuff. So it is still seen as a really viable investment by the younger generation. So I think actually, if nothing else, it's really encouraging to see that despite everything that's going on, younger investors are certainly still looking to support the private rental sector. And lastly, some really interesting house price data from our friends at Hometrack, who've released one of their rather wonderful reports. So first thing is, house prices are 1.4% higher over the last 7 months, or the first 7 months of 24, having fallen over the final half of 2023. So house prices are certainly starting to perform again. All measures of activity are up year on year. The long-awaited base rate cut has had a major impact on market activity so far. So actually, what they're saying here is that the number of people registering interest in buying a house, the number of properties coming on the market for sale, all that kind of stuff, all the data there is up. So it sounds like the house market is finally starting to get going again. Now, price inflation has improved across all areas, remaining slightly negative in southern England, but with London positive at 0.2%. Now, this is a really good piece of news for everybody. So whereas before some regions had increased and some had decreased, actually with the exception of southern England, actually everywhere is now in the positive, including London, which is the area that always is kind of like the fastest to grow and recover essentially. 1 in 5 homes has had the asking price cut by 5% or more, an above average level showing continued price sensitivity amongst buyers. So I think what we can take from this is that if you're going to speak to an estate agent and saying, I'm thinking about selling my house, can you put a value on it? And they give you a number, there's a sort of 20% chance that you might actually have to kind of accept a number circa 5% lower than this. It takes 28 days to sell a home with no asking price reduction, but 73 days if you overprice and then need to reduce by 5% or more. So essentially, if you're going to put your property on the market and you want to get it done in a reasonable time frame, you need to price the property really, really competitively. And if you do that, it sounds like it will sell really quickly. If you're kind of a bit more bullish with your price, you can expect things to be a lot slower. And lastly, house prices are on track to be 2.5% higher over 2024 with 1.1 million sales. So actually by the end of this year, your property portfolio is going to be worth circa 2.5% more than it was at the start of 2024. So with that in mind, hopefully that gives you a good insight into where things are headed. It does sound like the housing market is starting to really kind of open back up again. It's going to be, I think, not an overnight kind of hallelujah moment. I do think it's going to be relatively slow. Each time we see a reduction in base rate, that's going to really kind of help build things up. But I think for now, in terms of the housing market, looking forwards, things are feeling pretty rosy. And that's us for this week. Thank you, as always, for joining me. I hope you found it helpful. And as always, if you have any suggestions of things you'd like us to include, exclude, all that kind of stuff, do let us know. We'd love to hear your feedback. And also, question of the week. If you have any questions you'd like to ask, please do just pop them on the comments below or send us an email, whatever works for you. But if there is something that you think would be interesting to either for yourself or for the broader, your landlord peers, do ask away. Very happy to have a good old crack at answering your questions. So it just leaves me to wish you a wonderful week. I hope it is very, very peaceful for you. And if you do have any questions, do give us a call, 0345 345 6788. I will see you same time again next week.